welcome to the weekly outlook. We're just going to quickly go through the calendar and look at what we're going to be trading next week. Okay, so the first announcement we've got is actually at 1 p.m. on the SNB Chairman Jordan speaks from the Swiss franc. Now this is actually on Sunday, so when the market opens we could see a bit of a difference in our euro Swiss franc trade. Okay, so it's going to be ideal to look out for that. We're already in that in those positions at the moment, so there's nothing really to add, just to keep an eye. Hopefully he's going to say stuff or perhaps mention the floor at 1.2 there. If I can just bring that chart up, in fact. Okay, so you can see how it's been down to this 120.10 level. It did have a couple of spikes up. This is starting to get a little bit like what happened way back in 2012. We started to get these big spikes off of the level. It was very flat. We had these spikes off it, and then eventually it started to rally. So I'm hoping for that to happen. There's a gold referendum coming out on the 30th of November, but the vote is swaying towards no. Okay, so the only concern there was that the S&B was going to have so much money tied up in gold that they wouldn't be able to defend that floor by purchasing euros. But it looks like that referendum is going to turn out to be a no for holding gold anyway. So we should be fairly safe on that. And they've already reiterated the fact that they will be defending the floor as per usual. So holding those positions. And got no reason to believe that anything's going to change there. Okay, so on Monday we're going over to the euro. We've got the German IFO business climate. Now, we've had that big push down off Mario Draghi's comments on Friday, which we were trading quite nicely. And what we're going to be looking for now is either continuation of that push down or some slight pullbacks where we're able to get back into that trend. Now, if we have a look at this push down here, you can see how it broke out of this rising pennant pattern there, and we're now looking at this big pullback. The actual 50% retracement on this at the moment is around about 12467. If I could just draw that on there. Okay, 12472. Okay, so that seems a little bit high to me. But in realistic terms, when you look back at this sort of this area of support here, it's still very feasible. But bearing in mind, this is Saturday morning. When this market opens on Sunday, it could open up down here, it could open up down here, or it could in fact open up here. But anything higher than where it is at the moment, then obviously that price still stands. Anything lower, then we need to adjust the Fibonacci retracement. I will be acutely aware that 124 could hold as resistance as well, and we might not get that push back all the way back to 12472. But if that IFO business climate comes out slightly better than expected, that's what could cause the slight rally. And if that happens, I'll be looking at my trading plan, I'll be looking at the reasons why, and then I'll be looking at entering at the 12472. Okay, but however, the number is expected to come in slightly lower, so I'll be looking to maybe add one or two small lot size positions at 124, and then going for the bigger lot sizes if it pulls back to 12472. But I'm bearish all the way on the euro next week. Okay, moving on, we've got BOJ. Governor Kuroda speaks at 1 AM on Tuesday. If we go to the US dollar, Japanese yen, I did actually take an entry price for a buy on this on Friday afternoon in the live room, and I believe that is probably going to be the best price that we may well get. It's pulling back very, very lightly on these up moves, and then when it moves up, it's breaking all sorts of levels, it's taking out people's stops, and it's continuing to make new highs. It's defying all analysts' expectations of big pullbacks at the moment. So unless nothing geopolitical comes into the mist, then I don't see this anything standing in the way of this reaching 120. However, be aware of the Ukraine and the Russian situation. If people start to seek safe haven flows, then we could start to get a pullback, and it could even pull back as low as 11,000. If that's the case, then we're either going to have to hold those positions for a huge amount of drawdown, or close them down at a small loss and then re-enter at the lower prices, which is obviously a little bit more favourable. Okay, so moving through again, 4:45 AM, we've got Governor Kuroda speaks again on Tuesday morning. So Tuesday morning wake up will be the will be the big telltale sign about what's happened there. We've got Governor Carney speaks at 10 a.m. on Tuesday. Now, the interesting thing about this is Governor Carney was very dovish with the inflation report. Then we had a bit of a hike in inflation, and then we had the MPC vote last Wednesday, which remained the same at 207, suggesting that there's still two members that are keen for an imminent rate hike. The majority of the MPC also stated that they believed inflation could grow very rapidly. So it's going to be very interesting to see what BOE Governor Carney has got to say at 10 a.m. on Tuesday. If he's dovish, then we're going to see the pound fall further. If he's changed his tone, which he very often does, he can be extremely misleading for the markets, Mr. Carney. And if he does change his tone, then we're going to see this pound start to rally. And I think if it starts to rally off Mark Carney's speech, I think we're going to see it rally quite hard. So at the moment we're at this 15656 level. I'm starting to believe now that my original floor for this was 1.5. Okay, I've moved that up since we had that MPC vote remain split, and I've moved it up. My floor now on this is 15500. Okay, I believe that's going to hold as support, and I think that's where we need to start looking for the rally. Okay, so any dips down to that before the Mark Carney speech, and I'm going to be listening to what he says very, very closely. It's going to be a market mover. Okay, core retail sales on the Canadian at 130. Now, we had the CPI out on Canada on Friday, which did cause a little bit of a push down. It caused a push down to break out of this declining channel that we've got here, but then it was very quickly retraced on when we had some US dollar strength come in. This doesn't necessarily mean that it's not going to continue down. I think it's possible that it could do. However, it needs good data for it to carry on that momentum. So this CAD retail sales, core retail sales, due out on Tuesday at 1:30. It is expected to come in slightly better. It could cause this to push down. So maybe taking sell positions back outside of this channel again could be the way forward. US dollar prelim GDP quarter on quarter as well at 1:30. That's actually expected to be slightly weaker. So the US dollar Canadian trade could be the one to look at. We've got weak data coming out, possible weak data coming out on the US dollar versus possible strong data coming out on the CAD. I think we could see this push down further. Okay, so CB consumer confidence on the US dollar at 3 p.m. This is expected to come in slightly higher. So again, we could go back to our sort of trades, things like the euro, where we're bearish on the euro at the moment. Let's concentrate on trading those weak currencies against the strong currencies where we know we're going to get the volatility. Okay, and that's where we're going to make the most profit. So let's concentrate on those. Coming up to 3 o'clock on Tuesday, let's make sure that we're in the euro at a good price. Let's make sure that we're locked in. If we're not, then we need to consider the price at that time and look for getting in there. You've seen the retracement levels there. You can see where the support and resistance areas are. This is where we should be looking to take sell positions as it pulls back to those areas. Wednesday, second estimate GDP on the pound. Not expected to change on this. However, if it does, again, if this jumps back up to 0.8, which it has been recently, and no reason why it might not, especially after that the better data that's been coming in. We had a huge retail sales figure off the pound last week. This very could well cause a bit more of a rally as well. If I've noticed just on the last 3 or 4 data releases on the UK, the data has started to improve directly after we had that long run of poor data and the inflation dropping off due to low oil prices. It could very well turn around and go the opposite way very, very quickly. So we need to keep an eye on this data and be prepared for that pound rally. Okay, 1:30 on Wednesday, we've got core durable goods on the US dollar and unemployment claims. Unemployment claims slightly raised last time to 291k. Expected to drop to 287. I don't think it will be a massive market mover as it's only dropping back down to previous levels from last week. However, if it falls quite significantly, a lot closer to that 200k, then we will start to see that US dollar strengthen. It could hamper the rally on the pound, but it will certainly pull down the euro US dollar further. Okay, which is what we're hoping for. So again, look at trading these weak currencies against the strong currencies. And keep an eye on those as well. New home sales at 3 o'clock on Wednesday. Not really looking for a massive market move on here, just to add to momentum to those already trading pairs. Thursday, we've got the Aussie dollar capital expenditure quarter on quarter. Expected to be slightly weaker, which is good news. We have got some trades on the Aussie dollar at the moment. We did see a bit of a rally due to due to the PBOC, the Bank of China, cutting their interest rates surprisingly to traders on Friday. However, it was short-lived, as they very quickly came in with language saying that they looked at it as being a neutral rate cut, as a neutral rate decision, balancing things out. So that was very quickly coupled by a start to return to the price on the Aussie dollar. So still looking for the downside on the Aussie. So any Aussie dollar coming out, data coming out which is going to be poorer, as suggested on the private capital expenditure quarter on quarter on Thursday, then I'd be looking for this to pull back further. Entry prices around about the 8.7 level at the moment is a good place to go. However, if you can't get into there and you miss that, then I would look at entry prices below 8.650. Sorry. Okay, nothing really else out on Thursday. Big point data, well, not really a big data point, but certainly one that I'm interested in on Friday morning or midnight on Thursday is the New Zealand dollar. Okay, New Zealand dollar, US dollar. We've been in this for sells right down at the bottom of this trading range here for a while. Recently took another sell at the top of the range. I am looking for this to come down. Don't forget, the RBNZ are talking this down quite heavily. We did have a poor retail sales figure come out on the New Zealand dollar. We also had a very poor GDT, the global dairy trade index, come out as well, a lot lower. So the pressure is on the New Zealand dollar at the moment to drop down to that Goldilocks price that the RBNZ are looking, which is over 1,200 pips away. Okay, so it's got a long way to fall. They keep suggesting that it's highly overvalued at the moment, and I believe they're correct. However, I do believe there will be a floor around that 65 cents level, and I'll be looking to buy it back. But until then, I'm sell all the way on the New Zealand dollar and that ANZ business confidence. If that drops off, then that could facilitate a further drop down on there on Friday as well. Okay, later on Friday we got the at 10 a.m. we got the Euro CPI flash estimate. Again, we did have a slight hike in the CPI last time, sorry, it dropped a slight hike up to 0.4, which did cause a bit of a rally on the euro. However, this time it's expected again to drop back down to that 0.3. So maybe it was just a figure of speech here, but a flash in the pan for the CPI flash estimate last time. So I'll be looking to see that data coming clearly. If it does drop off, or even if it falls to further to 0.2, then we're going to see that euro drop even further. However, if it comes in at 0.4 or higher, then we will see a rally back above that 125 area, and probably see it start to consolidate again around that 12569 area. Okay. Apart from that, there's not really much else I want to look at. The GDP on the Canadian again looking for strong data. It's going to have an effect on the US dollar Canadian. There's nothing else. There's nothing out on the US dollar at the same time. So we could see some short-term strength on that Canadian. If we stay below this declining channel from the previous data announcements on that week, then I would suggest holding those sell positions through that 130 alert on Friday as well. Okay, so that's the weekly outlook. I hope you managed to get some pips, and I shall see you next week.